Welcome to Yadnya Investment Academy. This video intends to give you a single snapshot of the options available under the Section 80C. The various options available for investment under the Section 80C are Public Provident Fund, Employee Provident Fund, Tax Saving FDs, National Pension Scheme, Equity Linked Savings Scheme, National Savings Certificate, Senior Citizen Savings Scheme, Life Insurance Policies, and Sukanya Samriddhi Yojana. We are going to compare these investment options on the basis of the most important factors, which are returns these investments give, the taxation, and their lock-in period. The figures in the returns column indicate interest rate or returns provided by an investment option on an annual basis. Public Provident Fund, Employee Provident Fund, National Savings Certificate, Senior Citizen Savings Scheme, and Sukanya Samriddhi Yojana are savings instruments. These instruments provide fixed interest rates, and these interest rates get revised each quarter. As of January 2017, the interest rate provided by PPF is 8%, by Employee Provident Fund is 8.65%, by National Savings Certificate is 8%, by Senior Citizen Savings Scheme is 8.5%, and by Sukanya Samriddhi Yojana is again 8.5%. As of January 2017, tax saving FDs are offering interest rates of around 6 to 7% on an annual basis. In case of NPS, you might be seeing higher returns currently, but that is due to the recent rally in the bond market, and that may not be a true picture of the returns NPS can provide. Till recently, you could allocate a maximum of 50% of your NPS investments to equity and remaining to debt, and hence equating NPS to balanced funds is a better idea. Balanced funds have given returns of around 10% on an annual basis in the past. Just to update you, NPS has launched two new schemes. One is conservative, through which you can allocate a maximum of 25% of your investments to equity and remaining to debt. Another scheme is an aggressive scheme, wherein you can allocate a maximum of 75% of your investments to equity and remaining to debt. Equity-linked savings schemes, being 100% equity, have the potential to give higher returns, and these schemes have given returns of around 12 to 15% on an annual basis in the past. Life insurance schemes have very high charges, and so after deducting charges, they are able to offer only 6 to 7% of returns on an annual basis. All the returns that you see in front of you are pre-tax returns. Let us look at the taxation part of these returns. The returns earned or the interest earned in case of PPF, ELSS, and Sukanya Samriddhi Yojana are not taxed. In case of EPF, if you withdraw your funds after completion of 5 years, the interest earned is not taxed. But if you withdraw your funds before completion of 5 years, there's a TDS of 10% that is levied if your PAN number is registered. And in case your PAN number is not registered, the interest is taxed at 30% flat. In case of NPS, if you retire after the age of 60 years, 40% of the corpus that you get on retirement would be tax-free. 40% has to be compulsorily invested into annuities, and the remaining 20% can be withdrawn after paying taxes according to your tax slab. And if you don't want to pay any taxes, you can invest the remaining 20% amount again into annuities. And in case you retire before the age of 60 years, you would have to invest 80% of the NPS corpus into annuities, and the remaining 20% can be withdrawn after paying taxes according to your tax slab. In case of tax saving FDs, National Savings Certificate, and Senior Citizen Savings Scheme, the interest earned is added to your gross income and taxed according to your tax slab. In case of life insurance policies, the returns earned are not taxed if the sum assured is more than 10 times of your annual premium. And in case the sum assured is less than 10 times of the annual premium, the returns are added to your gross income and taxed according to your tax slab. Let us talk about the lock-in period of these investment options. PPF has a lock-in period of 15 years. But you can avail a loan from the 3rd financial year, and you can start making withdrawals from the 7th financial year, subject to certain conditions. In case of EPF, the term of employment is ideally the lock-in period, but while switching jobs, people usually withdraw their EPF funds. They should ideally carry forward their EPF account. After completion of 5 years, loan against EPF account is possible, or even withdrawals are possible under certain conditions. Lock-in period in case of tax saving FDs is 5 years. In case of NPS, you get your retirement couples only on retirement, but from the 10th financial year, withdrawals are possible under certain conditions. In case of ELSS, the lock-in period is 3 years, and in case of National Savings Certificate and Senior Citizen Savings Scheme, it is 5 years. In case of traditional life insurance policies, the policy term is the lock-in period, and in case of ULIPs, it is 5 years. The lock-in period in case of Sukanya Samriddhi Yojana is 21 years, but 100% of funds can be withdrawn if the girl child passes class 10th and wants to go for higher studies, or if she turns 18 years old and wants to get married. Remember that a maximum of 1.5 lakh rupees can be claimed for tax deductions under the Section 80C for a given financial year, which is a cumulative of all the investment options shown here. Other heads which are not investment options but are covered under the Section 80C are children's tuition fees, principal repayment of home loan, and stamp duty and registration charges in the year of expense. Again, these options would be cumulative with the other investment options available under the Section 80C to be claimed for tax reductions up to a maximum limit of 1.5 lakhs. Now that you have data for returns, taxation, and lock-in period in a single snapshot for all the investment options available under the Section 80C, it is easy to guess that ELSS gives you maximum returns with no taxation and minimum lock-in period. Friends, hope the video would be helpful. Thanks for watching this video. Watch this space for more such topics. Until then, happy investing. If you have any questions, let us know in the comment section below our videos. And if you like our videos, please do subscribe. Thank you.